Hi everyone, I'm Naomi Wilkins, new business educator. Today I'm not recording a tutorial, but I thought there may be some people who would be interested in how I put my T2125 Statement of Business Activities totals into my personal income tax return. This is my second video in this series. I just finished putting together the totals for my T2125, and that is documented in my previous video. I've added a link to that in the comments. For the past few years, I have filed my income taxes with Simple Tax. It's a fantastic pay what you want online income tax preparation and filing application. This year, though, they were bought out by Wealthsimple. It still is currently a pay what you want model, but it will be my first year using Wealthsimple Tax. To take the mystery out of filing taxes, I thought I'd invite you to come along and watch me put in my T2125 Statement of Business Activity totals into Wealthsimple Tax. Let's get started. So this is the spreadsheet that I just finished working on in my last video. They're all the totals that we need to put into Wealthsimple Tax for our business income portion of the tax return. And so this is Wealthsimple Tax. You kind of scroll through and you answer questions about, let's see, your partner, your dependents, so on and so forth. This is the business income section of Wealthsimple Tax that we're going to be looking at today together. And there's additional support if you have questions beyond the scope of my video. They have their own help post. They also link to CRA's business and professional income page, and they also have a step-by-step guide. So you can see that I've put in my business name. Behind there is my GST/HST number. It's business income. I don't have an address separate than my home address. It's not a partnership. My fiscal period is January to December. Most people's is. And I'm a bookkeeper. If you remember, I spoke about the industry code. So the industry code for a bookkeeper is this one right here. And again, you can look up the industry code specific to your business and make sure it goes in there. Okay, I've just tried to do a bit of a split screen here. So for example, gross sales, commissions and fees, including sales tax. So I'm going to put in there the 6434.77, and I can put in the GST of 6952.67. And there was no returns, allowances, or discounts. I'm not using the quick method, and it calculated the 53,482 right there. And new this year, you want to put in your temporary wage subsidy that you received, but don't include that in your gross sales, commissions, or fees in the top here. That's a separate. So if it is in that amount, take it out because it's reported right here, and there's that gross business income right there, and it's going to match that net number right there. Next, we're looking at those direct costs, and I don't have any direct wages. I don't have any contracts, subcontracts, but I did have purchases. So I'm going to put them in there, 3937.56. Now, the reason it doesn't have purchases on Wealthsimple Tax is because they would consider that sort of an inventory type of purchase. So this is what it would look like. You would say, if you remember, I said in the last video that if you purchase any like assets, you can't use them as an expense to reduce your taxable profit. So let's say that you had no brick, you're a landscaper, you had no brick at the beginning of the year. So I had none in the beginning. And let's say your purchases were that 39 right there, 100. You bought $3,900 worth of brick. And let's say you had none left in the yard at the end of the year. So therefore you're claiming, so you'd say 0. And therefore you're claiming all of your purchases throughout the year. But again, if you had about $1,000 worth sitting in your yard, you're now only going to be claiming $2,900 for the year. So we can just go like this. There it is. And though if I was doing this for me, really, I would just put this in here. Because for me, I'm not a landscaper. This is really the costs. Those are those subscriptions that of QuickBooks, for example, that I resell to some of my clients. So it's not really inventory. So now we get to the overhead section, and we can see the advertising is $15.19. So I'm going to put that in. 24. Meals, look, it says enter the deductible part only, or the allowable part only, which is 50% of what you spent. And on our last video, as you remember, I only put in the 50% from my profit and loss into this box right here. Bad debt. Insurance, again, this is just insurance for the business. This is not any personal or vehicle insurance, home insurance or anything like that. It's just the business insurance. I had no interest. There's my business fees, and then my office expenses, 1258.56. See? They call it supplies as well. CRA's form says office stationery and supplies, but even Simple Tax agrees with me. Just call it supplies, CRA. Stop with the ambiguity. 715.01. And there's the professional fees. Like that. Management and rent is, if you remember, I don't have any of those. I don't have utilities. But look, even Wealthsimple calls it telephone and utilities, right? 1875.45. Oh, and look, they make that note. If you work from home, don't include your home telephone and utilities. Report them in the business use of home tab. That's what I said in my last video as well. So Wealthsimple really has these little notes trying to help you all the way through. I don't have any equipment that takes fuel other than my car, and now, we can't put anything in this motor vehicle section because it is an entirely different square. So if you remember from this, it is this section right here, and it's made up of a bunch of numbers. And so that is what Wealthsimple has given us to do as well. So let's bring this one over here, like that. And I can click here, and let's click this and go to that motor vehicle expense. So it is a Pontiac G5, and I haven't put my kilometers or my mileage here on this YouTube video. For my actual income taxes, I do have those numbers available, but for the purposes of showing you how I put my 2125 into Wealthsimple, let's say, for example, that I only drove 100 kilometers throughout the year and 60 of those were for business. That'll give us the 60% that I'm using for this example. So fuel and oil, that is 1351.48. We'll come back and talk about interest in a moment and why it's gray. Insurance, again, just the insurance for my vehicle. I didn't renew my sticker. There was some maintenance. 56. Again, leasing we'll come back and talk about in a moment. Ooh, this is new. Electricity for zero emission vehicles. Ha! That wasn't on there last year. I love it. And other expenses, I didn't have any. So we can see that the 320760, that matches what I have on my spreadsheet. I didn't make a typo. I love checking my work because nobody else is checking it for me. And also it's applied the 60%, as did I, and I come up with that same 1924.56. Now I did not lease my vehicle, and I did not have any car payments, like I haven't financed it. So if I did, because remember we couldn't click on this interest on the financing or the leasing if I leased it, because I would have to say yes to one of these boxes. So if I financed it, I would say yes. And then here is where we would add sort of the amount to claim for the interest on the financing. And then if I did lease it, if it was a leased vehicle, I would say yes. And then I would answer all their questions about the leasing, and I would answer that all right there. So while we're here, we can put in the depreciation for our vehicle. So I'm going to just pull up that section of my spreadsheet. It's over here. And it is a 10.1, by the way. I do have a passenger vehicle, so this is something to further investigate for you, or talk to a tax preparer or an accountant for guidance on this one. And my opening well, my closing in 2019, let's say, for example, was 4562.23. So I'm going to put that in here. 2019's closing is 2020's opening. So 4562.23. Okay. Now, I didn't purchase any other vehicles. That's what additions are. And I didn't sell any vehicles. That's what proceeds are. And this AIIP, that is a new incentive just over the last couple of years to encourage businesses to make capital investments into their business. So if you're doing your 2019 taxes and you purchased something in 2019, look into this AIIP. And if you're doing your 2020 taxes and you purchased an asset in 2020, go ahead and look further into the AIIP. But you can click and find out more. This is really just looking over the shoulder at how I do my T2125. Even though the 30% of that opening UCC is $1,300, Simple Tax also applied the 60% rule to saying you can only claim 60% of your depreciation because, according to your vehicle log, you only use your vehicle for 60% for business. So Simple Tax is doing that for me. I don't have to claim all of my depreciation or all of my CCA this year, though. Maybe I want to claim it more next year or the year after, and we can carry it forward if it's not beneficial to claim this year. But there's no reason for me to carry it forward, so I'm going to go ahead and claim it all, which means that's the UCC ending balance. Therefore, that's going to be my UCC opening balance for 2021 when I do my taxes next year. Now, it looks like we're at the end, but we're not. We just skipped there because we kind of jumped there from this arrow right here. And here's another arrow. I'm going to show you what that looks like. Now, if I did have equipment, I can either add it or dispose it right here. And I can do maybe the opening if this is the first year I'm using Simple Tax. I can do the opening for my other equipment in this section as well. But I don't have any other equipment. So I'm just going to shrink it and go back up again. And I didn't have any other expenses, but I did have business use of home. So if you remember on my T2125, that is right here. So I'm going to come on over here and I'm going to click business use of home. Now you can see I've decided to claim 15%. And what Simple Tax wants to help me do is they want me to talk about the total area or number of rooms in my home. And so I still like the 15% thing. So I'm going to say that I have 5 rooms, and I'm going to say that one of them is my office. And so what you can see here is the percentage of time you use that for business purposes. So this is like a good section for maybe if you're an Airbnb and you're like, well, I use all of my house, but you can't claim all of your expenses if you only do your Airbnb, say, 2 months out of the year. So what you need to do is you need to find out how many days of the year that you had your house rented out, maybe for Airbnb, or if you just had like a section of your home. Anyway, this is how that helps you make those decisions. So for me, 1 room out of 5, that's 20%, but I can simply say, and I use it 75% of the time for business, and that is going to give me my 15% that I have decided to use for my business use of home. So now I'm going to go ahead and put in the heat, which is $875.65, electricity, 0.56, insurance, 2178.69, maintenance, I didn't put any, mortgage interest, 4,600, property taxes was 3,256.12, and then other expenses I'm going to say was water, 1,754.54, and I mean that's where you can put rent too if you rent. And we can see that the subtotal 14,901, that matches, and that 223523, that matches mine as well. I really like when I can check my own work. And there we go. I don't claim any depreciation on the house because when I sell it, that would be recapture, so I don't even touch that. And that's it. We're down to the vehicle expenses, and then that is the end of the T2125. Let's see if the numbers match. There's that net income loss. Let's see. 34. Oh, it's different. Ugh. Okay, back again. So it doesn't match. And I'm going to show it. So look, this 34,943.28 doesn't match this number. And I looked at what the difference was with my calculator, and the difference is 59.55. I forgot to add that. See, I love checking my own work because nobody else is going to check it for me. So it says just interest. That's why I skipped it, but I'm going to put my bank charges there too. I guess you could put your bank charges in office expense as well, but I'm going to put it right here. So 59.55. There it is. Now let's see. Net income 34,883. 34,883.72. 73. It's a penny off. That doesn't matter at all. So there we go. And that is how I put in my T2125 totals into my Wealthsimple Tax online tax preparation software. And we can now print the form specifically if we wanted down at the bottom. And so here's a list of all the forms that are on my tax returns. And for example, let me click that 2125 right down here. And I could download it and print it if I wanted. But if you remember last video, I sort of showed you the form that we were getting ready to do. And Simple Tax plugged all those numbers into the form for us. Once you have also checked and optimized, you can actually save to PDF all of the entire tax return. So that's something that you can do here. And with Wealthsimple Tax, you can also submit your tax return to CRA. I'm not going to click that now though, because all of those numbers that I just did were not real. They were just a case study to show you how I am going to do mine when I go to do it. So something important to note right now is the amount that this fictional business owes right now is $6,500. And that actually is not all income tax. So I'm going to quickly jump to what we call the jacket, the first couple pages and the last couple of pages. I'm going to jump down to this second to last page, page 7 and 8 of the jacket, the last few pages, back few pages of the tax return. And we can see that the amount of federal tax that would be owed is only $2,500. And that the provincial tax that would be owed would only be $1,275. But a huge amount here is this CPP that is payable on my self-employment earnings. Now, we do owe CPP on our T4 earnings, but those are deducted right off of our paycheck, so we don't even see it. And further than that, when you're self-employed, not only do you pay that, it's about 5% that you would pay as an employee, but when you're an employee for somebody else, the business owner also contributes an additional about 5% of CPP on your behalf. So if you're self-employed, you're not only paying that employee portion that would have been deducted off of your T4 if you were somebody else's employee, but you're also paying the employer portion. So you're paying twice as much CPP than you would if you were an employee for somebody else's business. Now, this is CPP contribution, so theoretically, you'll be getting that back in one way or form or another when you retire and claim your Canada pension in future years. But it is something that you do need to be aware of when you start your own business, that you're not only paying income taxes on your employment earnings, but you're also paying twice as much CPP as you would have been paying if you were an employee for somebody else's business. And again, CPP is about 5%, it changes every year, but it's about 5% on your earnings. And so that's about 5% times 2. So it's about 10% of your taxable profit. So you can see that the income taxes payable on this example is about $7,000. There is this climate action incentive credit. You're not going to see that every year, but that just happens to be there this year, and either I would claim it or my husband would. So often when new business owners start a business, they forget that nobody is taking income taxes off of their paycheck, if you will. And they don't realize that they're going to be charged income tax on their profit of their business. So I highly suggest that not only are you thinking right now of 2020 taxes, but I want you to start thinking of 2021's taxes. So for example, I'm not worried that I would owe $6,500. I'm not worried at all, because for all of 2020, whenever anybody paid me money, a client, the first thing I would do is I would take the 13% that's not mine, that's HST, and I put that directly into an HST savings account. Done. It's not my money. It's CRA's. Don't touch it. Then I take an additional 20% off of that pre-tax amount that I received, and I put that into my income tax savings account. Now, it is my money, but it's my money that CRA wants me to pay in income taxes at the end of the year. I do it this way because I am in the service industry, meaning to say my overhead isn't very high. Most of my income is earned by offering services. But for those businesses that have maybe, let's say you're a landscaper and you're not only charging for the installation, but you're also charging for the materials and the, insurance and the employee costs and all of those different expenses. So it doesn't make sense to take the 20% of the pre-tax amount and put that into a tax savings account. This is what I suggest. I suggest that for businesses that have much more costs than maybe just a service-based business like a designer or a bookkeeper or so on and so forth, for those businesses that have more of a direct cost component to what they're selling, you need to know, everybody needs to know what their profit is last month by the 15th of the month following. But it's especially important for businesses that aren't in the service industry. First of all, you want to be making sure that last month was profitable, and if it wasn't, then you need to address that. So that's very important. Once you've addressed that, or once you've looked at it, now look at that taxable profit for that month. And then move 20% of the month's taxable profit, move 20% of that into your income tax savings account. Now, that could be a higher percentage or a lower percentage based on your personal situation. So, of course, the larger the business you are, the more important it is to have a tax preparer or a tax advisor or an accountant to discuss these sort of things with. But definitely, it's important to be cognizant of the fact that you're going to owe maybe 20% of your profit income taxes. So each month you want to look at last month's taxable profit, take 20%, move that into savings. Also, look at the HST collected and how much you've paid on expenses. Look at the net HST owing for that specific month and move that HST or GST into your GST HST savings account. So if you're operating a business, you're going to want 3 different business accounts. You want your operating account, you want your GST HST savings account, and you want your income tax account. So just to remind everybody here, don't just be thinking about 2020. Now's the time to be thinking about 2021. Also, I want to point out that this year I did not pay any tax by installments. That's why I had that income tax savings account. But this is the second year in a row that I have owed over $3,000 in income taxes payable in this box 150 right here. And because of this, for the upcoming tax year for 2021, I now have to pay my income tax in quarterly installments. So basically I have to take this number, divide it by 4, and every quarter submit that to CRA so that I don't have a huge payable again next year. And so again, this isn't something that people think about in the first or second year. And then in your third year of business, you might not realize you need to do that just because it's sort of the rules change after a couple of years. So that's not just for people who are maybe running a business. It's for anybody who owes over $3,000 2 years in a row. Then that means that the current year, they're going to have to start paying installments to the next tax year already. So if you're new or starting a business, that's something to note, that if you have a balance owing more than $3,000 2 years in a row, you're going to need to start paying quarterly installments for this current year. So for 2021, once I file this tax return, then CRA should send me some installment vouchers so that in this current year, 2021, I can start making those quarterly installments to my 2021 tax return that I'll be doing next spring. And that's it. If you're interested in seeing how I created that spreadsheet that I was talking about in today's video, I have a link to that video in the comments. And also that video has a link to the actual Excel spreadsheet that I use to categorize or organize my T2125 totals. It is just blank, so you do need a bit of knowledge on how to use Excel. But yeah, thanks so much for watching. Hopefully by sharing how I do my T2125 statement of business activities on Wealthsimple, I've taken the mystery out of what you will need to file your income taxes on time, whether you're doing them yourself or seeing what totals your accountant will need from you. If you liked this video, hit subscribe for more business success inspiration. I have courses available. Find out more in the links in the comments. You can follow me on Twitter and Instagram at BeThatBusiness. What type of business will you choose to be? You need to be intentional. Be that business that is in compliance, that business that files its taxes on time. And don't waste money on late filing fees. Don't give CRA more money than you have to. Be intentional today. Get out there and be that business that thrives. And don't waste money on late filing fees. Don't give CRA more money than you have to. Be intentional today. Get out there and be that business that thrives. Can you just stand there for a quick second? Sorry. Be intentional today. Get out there and be that business that thrives. Thanks. Is that where I forget now?
Yep. I'll put that, be that business that thrives.
Okay, good.